As we've seen the crypto markets take a tumble this weekend, let's dig into the news on why that may have happened. Also, covering cryptocurrency taxes, as I have had many questions lately, as a lot of new people in the space first don't even realize you have to pay taxes on your cryptocurrency gains. Second, do not understand all the different ways cryptocurrency can be taxed. And with the IRS really cracking down on tax regulation in cryptocurrency, Uncle Sam's going to get his. So me personally, I am not trying to evade taxes and I will file my taxes properly. Welcome back to my channel, everyone. On this channel, I like to talk about different ways to make money on your phone, creating passive income sources, making good sound investments, and some helpful tips here and there. So if you like this type of content, then hit that like button, subscribe, and click the bell notification so you get notified when I make videos in the future. So what could have caused this pullback? First off, pullbacks are healthy. You cannot just see prices go up forever. Some of the main factors that we've seen come out. The US Treasury is set to charge many financial institutions with money laundering. Yes, that news came out over the weekend. There was no credible source for this news either. On top of that, from my understanding and research, the US Treasury is not the one that would be heading this investigation and going forward with these charges. This was in a tweet from FX Hedge, which is usually a pretty reputable source on Twitter. But there again, did not source where they found this information. Now it seems that if charges did come down on these financial institutions, it would be the Department of Justice that would be bringing down these charges, not the US Treasury. So there is a lot of misleading and missing information in this story, which could have been one of the reasons for the market to start selling off. As we've had this big run-up lately, a lot of bad news comes out after these run-ups in order to get weak hands out of the market. Next, and this one isn't so much FUD, Bitcoin hash rate drops over 45% as Xinjiang blackouts are to blame for this outage. Xinjiang is a province in China, so with hash rate dropping, the security of the Bitcoin network is depleted to a certain degree, which causes less blocks to be mined and transaction volume to drop. This also shows us the Bitcoin network is not as decentralized as we may have thought. If a blackout in a city in China has this kind of effect on the network, we may have further problems. But on the other hand, you can look at this as a good thing. Now we know these problems, and hopefully more mining can be spread out throughout the world. Also, one of the major miners moved and sold over 9,000 Bitcoin on Binance. Another reason for downside selling pressure. All this FUD and bad news causing a record $8 billion of liquidated funds, which is the people trading on leverage, borrowing capital to increase upside potential. But it also has the same effect on the downside. This is all public knowledge on the blockchain. So when the market gets greedy and there are a lot of longs, these things tend to happen. Over 1 million accounts were liquidated in this massive sell-off. So when we run up as fast as we did, the market tends to humble us pretty quickly. Personally, leverage trading is not for me. In my opinion, it's pretty much gambling, as there is so much volatility in the crypto markets already. Do you really need to multiply that even higher? So that was a quick recap of the news. Let's move on to taxes. If you are new in the cryptocurrency space, you need to understand what is going on with cryptocurrency taxes. And before getting into this, I am not a tax professional. This is what I understand by the cryptocurrency tax laws and the research that I've done. Be sure to contact your tax professional when filing your taxes. First off, it amazes me how many new people in crypto don't realize you have to pay taxes on your cryptocurrency gains. And we are past the point where the IRS is letting people go and fix their mistakes. They are going to really start cracking down on people evading their cryptocurrency taxes, whether they're doing it purposely or by accident. And honestly, on these tax forms now, they make it pretty hard to say, I didn't know. When you file on the 1040 form, it specifically asks, at any point in time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency, yes or no? Pretty straightforward. In the past, regulation has been changing, and they've been lenient on this, letting people fix their problems. Mark my words, they will be making examples of people evading taxes through this bull run. So let's dig into what a taxable event in crypto is. And also pointing out that this is for US residents. Depending on where you're watching all over the world, you may have to do some research on your provenance, as laws vary all over the world. First, what is not a taxable event? If you buy cryptocurrency on any exchange, Coinbase, Gemini, Robinhood, Voyager, my favorite crypto brokerage, where you get $25 in free Bitcoin for depositing and buying $100 or more of any digital asset when using a referral link. Yep, mine will be in the description below. If you don't have a Voyager account and want to help out the channel, go ahead and use that link. Just make sure you use someone's referral link so you get that free Bitcoin. Now back to taxes. So if you bought anything and don't sell it, whether you moved it from one exchange to another, as long as you did not sell that crypto asset, that is not a taxable event, as the laws are written today. It's like if you moved your stocks from Robinhood to Webull or any other brokerage. If you didn't sell those stocks, it does not reset your capital gains. Same in the cryptocurrency market. Leading us into capital gains tax. As some people never traded stocks before they jumped into cryptocurrency, there is short-term and long-term capital gains. Yes, that thing where the government gets its cut for you making good investments. So let's cover short-term capital gains first. If you hold any crypto asset less than 1 year before you sell, you will be taxed with short-term capital gains. And depending on what tax bracket you fall in, that could be anywhere between 10 and 32% of your profits. And that's at a federal level. Depends what state you live in, you may be taxed even more. Long-term capital gains, holding anything 1 year or more. With long-term capital gains, depending on your tax bracket, you will be taxed between 0% and 20%. Again, at a federal level. Depending on what state you live in, it could be more. So it all comes down to, if you sell cryptocurrency, you will be paying capital gains tax. It does not matter if you sell Bitcoin for Ethereum. Those are two different cryptocurrencies. Therefore, you are selling Bitcoin to buy Ethereum. Taxable. Let's run through an example right now. And this is where some people really get tripped up and don't understand the tax laws. Say you buy $1,000 worth of Bitcoin at $30,000, and Bitcoin goes up to $60,000. So now you have $2,000 worth of Bitcoin. You sell all your Bitcoin and buy Ethereum at all-time highs just recently at the end of last week at $2,500. And it drops down to $1,900. You freak out and sell. Well, guess what? You just took a $600 loss on that Ethereum. You also still have $1,000 in profits from your Bitcoin trade. You are still taxed on that $1,000. So depending on your tax bracket, even though it may look like you still have $400 in profit from those two trades, you may actually be paying more taxes than that $400, putting you in the negative over those two trades. Now, yes, you can still write off a portion of your losses if you have losses to offset some of your gains, but believe me, it's not going to make up the difference. So let's cover some other things that are taxed differently in crypto that can benefit or hurt you depending on how you use them. If someone gifts you cryptocurrency, that is not a taxable event until you sell that crypto. Then you will pay capital gains. Now, on the other hand, if you gift someone cryptocurrency, that can be a write-off. Receiving cryptocurrency for goods or services, that is taxed as ordinary income, but it gets a little tricky, so stick with me here. If you got paid in cryptocurrency and you hold that cryptocurrency you received, say you received a full Bitcoin at $60,000. That $60,000 in Bitcoin will be taxed whether you sell it or not in that calendar year. Now, if you hold on to it and there's appreciation to $90,000 and that's the point that you sell, you will be taxed $30,000 under capital gains, and that $60,000 will be taxed under ordinary income. Some of the things that fall under this category: mining cryptocurrency, promotions like that $25 of free Bitcoin you get from signing up for Voyager, or that $40 of free Bitcoin you get for signing up for Celsius, link in the description below. And also those interest payments you get from Voyager, Celsius, BlockFi, and many others. Yes, that weekly or monthly interest you receive is taxed under ordinary income, and it's taxed at the price that you receive it at. Anything you profit from over that price is taxed under capital gains. So it doesn't matter if you're receiving your interest and in USDC, stablecoin, Bitcoin, Ethereum, VGX, it doesn't matter. Whatever the price of that interest is when you receive it is ordinary income. Anything that appreciates over that will be taxed under capital gains. Airdrops and cryptocurrency you receive from forks also falls under ordinary income, and everything I just talked about applies. Now let's jump over to fees. I tried to use cryptocurrency exchanges and brokerages with little to no fees, but if you do have fees, you can deduct those fees from your gains as well. So let's go over some of the common questions I get that I did already cover in this video, but I really want to drive home and make a point of. If you transfer your funds from a bank to a cryptocurrency exchange or brokerage and trade in and out of different cryptocurrencies, but never move your money back to that bank, it does not matter. Each one of those trades are still a taxable event. So remember that. You're not going to trick the IRS. They can track your cryptocurrency exchange and brokerages as well. Simply, if you sell or trade any cryptocurrency, whether it's one for another, that is a taxable event, as I do not want to be audited. And another thing, if you are an active trader and you have quite a few trades on multiple different exchanges and brokerages, there are so many different tax softwares that you can load all of your trades from all these exchanges and brokerages to one place, and it combines and calculates those all for you. Also, when you're connecting to these tax softwares, it is sending read-only forms, so they do not have access to your accounts to trade your cryptocurrency. It does not matter what assets you plan to invest in. Do your own research and understand all parts of what you are investing in, which includes tax implications. So I hope this video helped. Comment below if you feel I missed something, and don't forget to give yourself a raise. I'll see you next time. A few videos popped up to my left and right. If one of those perked your interest, give it a click.